Hope you're having a wonderful day. Welcome to Monday Market Update time. I'm going to be talking a little bit about the 4-year cycle, where I see it, because right now we should really well be in the home straight. We are in August, September, October, November, December. That is Q4 of a bull market, and historically that has been when we've seen the concentrated returns for this market. As we know, Bitcoin has been stealing the show from all the altcoins essentially this entire run. We also have other things to consider, like is this a elongated cycle? Are we going to push in 2026? Some things we need to think through and have a talk about. So the 4-year cycle measured on the previous 2 cycles will lead many to believe it's all over in October. I think those people are going to be wrong. We might get a forced local top, but Q2 2026 is the most likely projection for a cycle top based on the macro work I've been doing. I've said it over and over. You've seen my charts, and that remains my thesis. Given some of the comments here, probably worth mentioning I remain data dependent. I'm not fixated on this view. If the data changes, so will I. That is the most important point here. We can all have ideas about where this is going and a thesis on where this is going, but we're not psychic, we can't see the future. So we have to remain data dependent. And that's what I'm talking about when we say, let's look at the broad base of indicators here. Is it looking more likely that we're approaching a top or close to it, or are you experiencing the top and now we're seeing the distribution down? That's where we have to use data rather than just gut feel and looking at the market and going, yeah, today I'm going to go long, today I'm going to go short, I'm going to swing my portfolio in and out because I'm afraid I've gotten out too early and then getting back in and you chopped up and then you're out. So yeah, I really like this this thinking here, and look, based on M2, based on the business cycle, based on the cutting environment that we're just moving into, it does feel like things are being pushed out. And because Powell held off so long, and also we've got this adoption curve is really picking up, as we've seen with the treasury companies and other demand drivers coming in. It will just naturally give us a bit more of a floor and a buoyancy with all of these pullbacks that we're seeing. And we're already watching that. We're expecting these levels to get hit. It doesn't. It just gets front run. A lot of these players that are buying are just buying the average. So whenever there's a dip, it doesn't go as low as you think because there's just all this natural organic spot buying underneath the price. None of this is derivatives based yet. And that's where we do have to get very wary. If this market is just being driven by derivatives and paper just moving us higher and leverage, that's when the big crashes can happen. But again, I don't know if we stay in a concentrated bear market for a couple of years, particularly when fiat currency is being debased. We know this narrative. The liquidity is moving higher, debt is becoming untrustworthy, gold's moving higher. This is the perfect storm for Bitcoin. It's what we've been thinking was coming for 10 years, but it just hasn't eventuated. And now we're seeing the cracks. We're seeing it really flow through. Again, what I thought would happen from here was, rejection at the 10 and then down into this one last area. So that just tells me the market's really strong. We didn't want to lose that 50-day moving average, which has been really useful for showing us strength in the market and as an area of support. So this box did what it needed to do, which is great. Didn't get anything down there, that's fine. Ended all these orders and just reallocated up here. I still have a bit of dry powder free, but I literally just cannibalized what I could and bought when I saw this big bold candle through the 10 EMA. I thought that was just an important signpost, and then bought a little bit more back into the range. So yeah, that's the way I'm looking at it. And also 121, look, we can manage things here if we lose the range again and go beneath the moving averages. But here, this looks like a really good setup. But I will say, we are still in no man's land. We are just back into this choppy range. But because we had this breakdown and almost like a fake out, now we've climbed back up. That's a really good sign that the bulls are actually going to continue this higher. Fake out and actual move now. Kind of like what we see, previous moves. We have a fake out to the downside, then up was another good example. Yeah, this is on a much larger scale. So chop sideways, drop down, and this whole thing is a fake out, and then we climb out, and then we have the actual move and continue higher. Just looking at this, my goodness, the emotions of the market, up, oh God, oh God, oh God. Everyone's getting bullish, and then you get the red. So we do have to be still a little bit cautious. The fact that until we crack that 121, we close above this range, so something like this, until we're up in these kind of regions, 120, 121, we're still range bound. We still can chop here until maybe the rate the rate cutting begins in September or later, but this could very well be the case. We could just ram to the range top and then come back down again and probably feel that out, which is probably not a crazy thought here. Or we run into the thing, we come back down again and then climb out. It's never going to be a one-way street easy ride, which again, you have to step back from the noise. XRP, yep, so actually really nice looking chart. Again, these longer term charts are so, it's funny how they work out when you do this. This was from the newsletter, as you know, guys. The breakout of the XRP all-time high over here, we kind of had the fake out move, bit of FOMO, and we've come back to the blue box, kind of like the squiggle there, the downwards wedge here. I think she's building for a massive breakout here, XRP, and this is exactly what you want to see. The bust up from the wedge, 3 days worth of consolidation. We might get another one a little bit lower down into the box, but overall here the trend is clearly up, but more confidence will be gained by buying it. Might be about $3.45. XRP BTC, yeah, so this is a much longer term downtrend versus Bitcoin, but as long as it's holding, you see my alert there, as long as it's holding 2575, as long as it's holding above, you know, this massive horizontal here, XRP is going to go higher against Bitcoin. I'm pretty confident about that. You can have your stops, you can have your alerts structured there and go from there.